All right, so today we're going to do a deep dive into construction loans, specifically how they work in Chicago's commercial real estate market.
Yeah.
And we're really lucky today because we've got insights from Michael Linton.
Oh, yeah, he's the best.
He's a broker with like almost 40 years of experience in this market and runs the website chicagodealflow.com.
I mean, if you want to understand Chicago real estate, he's the guy to listen to.
Absolutely. So we're going to try and break down how these loans work, why they're so important for the city's development, different types of loans, key features to watch out for, and we might even touch on some innovative strategies that are emerging in the market.
Oh, yeah, there's some cool stuff happening out
All
there.
right, so let's start with the basics. What exactly are construction loans?
So construction loans, they're designed to, they cover the costs of developing or renovating commercial properties.
Okay, so not like your typical mortgage.
Right. These are short term, and they're specifically for like the construction phase. They're usually converted to like permanent financing once the project is finished.
Makes sense. So it's not something you'd use to buy an already existing building.
Exactly. It's really about funding the actual building process.
Got it. So why are these loans so important, especially in a city like Chicago? I mean, we see new buildings popping up all the time, cranes everywhere.
Yeah. Construction loans, they're kind of the engine behind all that. They provide the capital to, transform empty lots or maybe take some older buildings and give them new life. It's all about enabling these new developments to happen.
Right. I mean, just think about it. Imagine a developer who wants to build a big, new, shiny office tower downtown in the Loop, or maybe a new residential building in, let's say, Schaumburg.
Right.
They need a way to pay for all that.
Exactly. That's where construction loans come in. Without them, a lot of these projects, they just wouldn't happen.
So let's dig a little deeper. What are some of the key features that make these loans unique?
Well, one of the first things you'll hear about is the loan-to-cost ratio, or LTC.
Okay, LTC, what's that all about?
So this ratio usually sits somewhere between 70 to 80%,
Okay.
and it basically determines how much of the project's cost the loan's actually going to cover.
Right, so the higher the LTC, the more the loan covers.
Exactly. But the developer usually has to put up the rest, like 20, 30%, as their own equity.
Ah, so they're putting skin in the game, showing they're committed.
Exactly. And that ratio, it's not set in stone. It can move around based on things like location, type of project.
So a fancy development downtown might get a better LTC than something, I don't know, further out.
Yeah, that's often the case. Lenders, they're more comfortable with less risky projects in prime areas.
Makes sense. Now, Michael Linton also mentioned this thing called a draw schedule.
Oh, yeah.
What's that about?
So, with construction loans, the money isn't just given all at once. It's dispersed in stages, kind of like chapters in a book as the project progresses.
So they hit certain milestones.
Right. Like, let's say you're building a retail space.
Yeah.
The first draw might be after the foundation is laid.
Okay,
Then another draw after the framing is up.
got it. So it's kind of a way to make sure the money's being used properly.
Yeah, exactly. It keeps things on track. And then there's the interest rates. Construction loans, they usually have higher rates than your regular permanent financing.
Why is that?
Well, there's more risk during the construction phase. There could be delays, costs can go up.
Right, it's not a sure thing.
Exactly. Lenders, they factor that uncertainty into the rates.
Okay, so it's a premium for that risk.
hmm
Now let's talk about different types of these loans. I'm guessing there's not just one kind.
Yeah, there are a few different flavors. You've got your traditional construction loan. That's your standard one for building from the ground up, like if you're starting a brand new office building.
Okay, the classic. What if a business owner wants to build their own place, like custom designed for them?
Well, they might go for what's called a construction to permanent loan.
Right.
Those are popular with owner-occupants because they kind of roll into a long-term mortgage once construction is done.
So it's a 2-for-1 deal.
Right. It simplifies things. Then you have bridge construction loans.
Okay.
Those are short-term,
Mm-hmm.
and they're used to bridge a gap in financing, like maybe between buying a property and actually starting to
It's
build.
a temporary fix.
Yeah, exactly. And finally, you've got renovation redevelopment loans.
Okay, I'm guessing that's for like fixing up existing buildings.
Right. They're specifically for updating or transforming properties that are already there.
All right, so we've got a good overview of the different types, but what about the nitty-gritty? What does it actually take to get one of these loans in Chicago? I mean, it's got to be more than just asking nicely, right?
Yeah. Oh, yeah, for sure. You need to be prepared. I mean, one of the most important things is a solid feasibility study. Lenders want to see you've done your homework,
Okay.
like market research, strong financial projections, especially for projects in newer areas. You got to show them this thing's going to work.
Right. Convince them it's a good investment.
Exactly. And your team matters too. Having experienced contractors, architects, lawyers, that adds a lot of credibility.
So it's not just about the project itself, but the people behind it.
Absolutely. And then a detailed budget and timeline are crucial. Lenders want to see a clear roadmap. Like, how's this whole thing going to unfold?
So they know you've thought it through.
Yeah. And don't forget about contingency planning.
Ah, yeah, because things happen,
Ah.
especially in Chicago.
Oh, totally. You got to have a buffer for delays, unexpected costs. Chicago's weather, it can be unpredictable.
Yeah, and those zoning regulations.
Right. You can get complicated. And lastly, you need a clear exit strategy. How are you going to repay or refinance this loan once the project's done?
Show them you've got a plan.
Exactly. Whether it's securing tenants, a marketing plan, you got to demonstrate that long-term vision.
So it's really about building confidence.
Show the lender you're in it for the long haul. That you're not just going to disappear once the building's up.
It's a partnership, in a way.
Right. They're taking a risk on you, so you got to show them you're worth that risk.
This is great. But Michael Linton also talks about these new strategies that are popping up.
Oh, yeah. There's some really interesting stuff happening.
Maybe we can dive into those in the next segment.
Definitely. We've talked a lot about the specifics of these loans, but I think it's important to remember Chicago's real estate market. It's a pretty unique animal.
It really is. I mean, every neighborhood's got its own vibe,
Yeah.
its own history.
Exactly. And that plays a huge role in how these construction loans are actually structured and, managed.
I see what you mean. So, how does that diversity in the market, how does that actually impact things?
Well, think about it. You've got downtown, it's all high-rises and hustle and bustle. Then you've got these historic neighborhoods. They're undergoing massive revitalization. And then the suburbs, they're sprawling out with, their own development patterns. It's a lot to keep track of.
Yeah. It's like a real estate tapestry, all these different threads woven together.
Exactly. Architecture, economics, the needs of each community, it's all reflected in the loans. Lenders, they have to consider all that, the risks and opportunities for each little pocket of the city.
So a project in the Loop that's going to be different than something in, I don't know, Wicker Park, right?
Totally. Location, it's huge for lenders. It's how they figure out, is this project feasible? What should the terms be? A project in a hot new area, that's different than something that's in a well-established market.
Like each loan has its own story, reflecting the little piece of Chicago. Okay, so let's shift gears a bit. Sustainability. It's a big topic these days. How does that factor into all of this?
It's great to see people thinking about sustainable design, making buildings that are good for the planet. And lenders, they're starting to catch on.
Yeah, I've heard about those green building incentives.
Right. So basically, lenders offer better terms for projects that are environmentally friendly, lower interest rates, maybe a faster approval process, things like that.
Makes sense. It's a win-win, right?
Absolutely. You encourage developers to build responsibly, and in the end, everyone benefits.
Now, Michael Linton, he's been doing this for a long time. I'm curious, what are some other trends he's seeing? Stuff that might shape the future of these loans in Chicago?
Well, one thing he's talked about is opportunity zones. Have you heard of those?
Yeah, but honestly, I'm not totally clear on what they are.
So basically, think of them as areas that are, primed for investment. They've been kind of overlooked in the past. Often they're in neighborhoods that have struggled economically.
So it's like giving those areas a chance to catch up.
Yeah, exactly. The idea is to attract investors by giving them tax breaks. Make it more appealing for them to put their money there.
Okay, I can see how that could connect to construction loans.
Right. It gives developers more options for financing projects in these zones, projects that might have been considered too risky before. It can really jumpstart revitalization.
It's like using private investment to create positive change.
Exactly. But, it's important to do it right. Make sure it benefits the community, the people who already live there.
It's got to be about more than just profit.
Absolutely. And then there's technology. It's changing everything, right? Even construction loans.
Yeah. What's happening on that front?
Well, for one, there are these online platforms popping up. They connect borrowers and lenders.
Okay.
And it makes the whole process a lot smoother. No more piles of paperwork, back and forth. It's all streamlined. You can compare different loan options. Everything moves faster.
So it's like bringing construction loans into the 21st century
Exactly. And then you have data analytics, artificial intelligence, all that.
Oh, wow.
It's being used to assess risk, predict how a project will perform. It's pretty amazing.
So it's like a crystal ball for real estate.
Kind of. Lenders can get a much clearer picture of the risks and the potential rewards before they commit to anything.
It's wild how technology is changing everything. Not just how we build buildings, but how we pay for them.
I know, right? It's all about being more efficient, using data to make better decisions.
So looking back at everything we've talked about, Chicago's construction loan market is pretty complex. There's a lot going on.
It is. It's always changing, always evolving, but that's what makes it so interesting.
Yeah, and Michael Linton's insights have been so helpful. He's seen it all.
He has. And his website, chicagodealflow.com, it's an incredible resource. If you're serious about Chicago real estate, you got to check it out.
I love how he explains things. He
Oh.
makes it easy to understand. You can tell he really cares about Chicago.
He does. He's a real advocate for the city. All right, well, we've covered a lot today. Different types of construction loans, the key things to look out for, and the challenges and opportunities unique to Chicago.
We even touched on some of the bigger trends like sustainability, these opportunity zones, the impact of technology. It's a lot to take in.
It is. But what would you say is the one big takeaway you want listeners to remember? It's about understanding that construction loans, they're more than just, numbers on a page. They're the tools that actually shape our city.
Yeah, they're literally building the future.
Yeah.
From those massive downtown projects to the smaller developments that revitalize neighborhoods.
Exactly. And Michael Linton, he really drives that point home. Understanding the market, being aware of trends, and most importantly, developing responsibly.
It's all connected. And his insights, they've been so valuable in showing us how it all fits together.
He really demystifies the whole process. And his website, chicagodealflow.com, it's a goldmine for anyone who wants to dig deeper.
Absolutely. Okay, so as we wrap up, I think what's really clear is that construction loans, they're not just about financing buildings. They're about investing in Chicago's future.
That's a great way to put it. I mean, think about it. Every project, it creates jobs, improves infrastructure, revitalizes neighborhoods.
It's ripple effect.
And those ripples, they can have a huge impact on the city as a whole.
Yeah.
But it's a responsibility, for both lenders and developers.
Yeah, it's not just about making a profit. It's about creating spaces that are sustainable, that benefit everyone.
Exactly. We need to be thoughtful about how these loans are used, make sure they're contributing to a better Chicago, for all Chicagoans.
Couldn't agree more. Well, folks, that's our deep dive into construction loans in Chicago. We hope you found it informative, maybe even a little bit inspiring.
We covered a lot of ground, different types of loans, the key things to consider, and the unique challenges and opportunities here in Chicago. Plus, we touched on those bigger trends, like sustainability, the impact of tech, the whole thing.
It's a fascinating topic. And if you want to keep learning, make sure to check out Michael Linton's website, chicagodealflow.com. It's a fantastic resource.
Definitely. He's got great insights, market analysis, you name it.
All right, so until next time, keep exploring, keep asking questions, and keep an eye out for our next deep dive into another captivating topic.